Welcome back. It's Tim and Julie Harrison. This is your favorite daily podcast, real estate coaching and training podcast. And I have to tell you, Julie, I did not tell you this,
What's
that
that?
we continually are within the top 50, sometime the top 25 podcasts in our section on iTunes in the world. How about
Cool.
that?
That's awesome.
Isn't that crazy? And
Yeah.
I have to say this is interesting to me too. The YouTube channel, even though we do get tens of thousands of views per month, it's
Hmm.
still not eclipsed the number of downloads we have on iTunes. And if you guys don't know this, I'm only sharing this with you in case you care, in case you're wanting to do your own media like this. But it's way harder to get somebody to listen to you on iTunes or any audio, only podcasts than it is on YouTube. And we've been doing this for so long. We've got literally I don't even know how many podcasts. We have over 10,000 past podcasts. It's something like that. And so to have a podcast that we've been doing for so long and have so many loyal people listening to us on audio form only is like really weird because most everyone is just assumes that a YouTube is podcast is YouTube. They don't know that podcasts were originally listen only. We started doing ours it was 15 years ago, 14 years ago, and we've done it pretty much every single day. So in any event, I really sincerely appreciate all of you continuously listening and downloading our podcast gives us a lot of motivation to continue doing this. And I have to also say, I'm really thrilled with the number of you that are so receptive of the content that we've been delivering to you guys of late, because somebody got me started on the whole red pill, blue pill thing. I mentioned it
Hmm.
yesterday. Somebody actually messaged that to me, said, you guys have really red pilled me as far as what's going on in the real estate industry, as far as what's being told to real estate agents. And I don't know, I'm sure all of you guys have seen The Matrix, but basically the red pill is something that Neo took, the pill he took to wake up and see the world as it really was. And so someone gave us a really great compliment. Frankly, I had to Google it because I didn't remember whether the red pill is the one that woke you up or the
Which is
blue pill.
which?
I had to research it.
Yeah.
Yeah, but they were giving us a really nice compliment that we red pilled them and they're waking up to the realization of what has happened to the real estate industry in the last 15 or 20 years, but specifically what's happened in the real estate coaching and training space and the overall space that focuses on selling things to real estate agents. And Julie and I have done our best to really hopefully help center all of you to the realization that this business can be the greatest blessing of your life, of your professional life at the very least, or it can also be the greatest curse. And what we're hoping all of you stay in alignment with is why you got into the business in the first place. And whether you actually kind of worked it through in your mind or not, you got in this business ultimately because you wanted freedom. That's really the core of what motivated you. And freedom for what? Well, freedom from what? Freedom from having to worry about money. That's the main thing, right? And the only way for you to have freedom from worrying about money is going to be, guess what? By having enough net profit. We talked about that on yesterday's show, and we're going to talk about it a little bit more today. But here's really the bottom line. What makes Julie and I so different? If you want to really know, well, okay, how's Tim and Julie compared to everybody else? We're going to tell you the things that work to generate you closed transactions as quickly as possible, and that cost you the least amount of money to do. And in some cases, in most cases, no money at all. Because as we discussed yesterday with all of you, your product of your business, it's sold houses, it's happy customers, it's all those things. But your actual product, what you should be thinking about your actual product being, is profit. In other words, if at the end of the day, at the end of the month and the year, you don't have at least 60, 75, 85% of the total amount of revenue that you earn for you and your business and for your family from your business, if that's not pure profit, then you are probably making a lot of mistakes that are mostly centered around branding, advertising, buying leads, doing all those sort of nonsensical things. But I'm here to tell you, and it's interesting, we've been doing this for so long. I mean, Julie and I started selling real estate in our mid 20s full time. In our first year in the business, we sold over 100 homes. So we've seen the rise and the fall of the different big grand ideas as far as lead generation. And the one in particular that comes and goes is the marketing and branding. And the marketing and branding thing is alive and well when there's a lot of money to be made, because the marketing and branding feeds into agents' egos, and agents conflate success with marketing and branding with the nature of the market on a whole. So when the market's doing really, really well, and there's all ships are rising and everyone wants to buy or sell real estate agents are going to do business just because they're there wanting to do deals. I mean, the average transaction count per agent goes up, everything, all those things. So what happened is, and it's starting to, agents again are red pilling and they're realizing it was all futility. But the fact is that during those boom times, all these agents start spending money on things that don't generate in business, and yet they still do business, but they don't realize they would have done the same amount of business, but more profitably without all the marketing and advertising. And a lot of you guys are going through that arc now. You're realizing that's true. And that's the reason that you're discovering our podcast, because, you feel that this has been the bottom of the market. It has been, historically, this has been the last, hopefully for the rest of our lives, real estate. I'll call it recession, if not depression, for the last 3 years. And we're at the bottom, and we're going to start pulling ourselves back up. And let me put numbers to it. This year, there's going to be between 4 and 4.5 million total home sales. A few years ago, it was like 6.3 or 6.4 million home sales. For the market to get back to what would be deemed healthy, enough supply to meet demand, we're still short by at least 1 million home sales per year. But that's all going to start changing faster than you can possibly imagine. So we are at the bottom. Hopefully, we're not going to be here much longer. We're about to see the government start talking about housing as their primary focus, which we're incredibly excited about. So you're in the right place at the right time. Now, please keep your head screwed on straight about what your principal and primary motivation should be, which is becoming rich from selling real estate. And if that word offends you, which some of you are offended by that word, let me put a definition around it so that you won't be offended. Rich is merely where your money works for you and you no longer have to work for your money. In other words, if you have to earn $10,000 a month to pay all your personal and family bills, right now, you earn it from selling houses or combination of things, whatever, adjust up, adjust down. Well, if you had enough money coming in passively, dividend paying stocks, annuities, real estate cash flow, EXP revenue share, business, right? But business, not really, because it's not passive, but you get the gist of it. Money that's coming in passively without your effort. Money is working for you. You no longer have to work for your money. And that money coming in passively is from, all the things I just said, but it more than covers all your personal overhead. You are, by our definition, rich. Rich doesn't have to be some big lofty number like everyone wants to brag about, 10 million, 20 million. It doesn't have to be that. It can be simply the cash flow that's coming in. So like, if you think about it, if you had to have $10,000 passively coming in to cover all of your overhead, in order to have that same amount of money coming in from investments, you'd need probably about, let me think, 30, 100, or probably about $2.5 or $3 million in the stock market, and like the S&P 500. Well, it's probably a hell of a lot easier for you to create $10,000 passively from, say, for example, EXP revenue share than it will be from saving up $3 million after taxes. But the real mission should be to do both. But none of this matters unless you're actually building a profitable real estate business. And that's what we help you focus on. And hopefully you guys are all vibing with what we're saying. We already know you are. Otherwise, this podcast wouldn't be as successful as it is. So you want the notes from today's show and yesterday's show, please go to harrisrealestatedaily.com. It is our newsletter. It costs you nothing to sign up for it. It takes 2 seconds. Just put in your email address. Then you have to double opt in. You're off to the races, harrisrealestatedaily.com. So Julie Harris, let's pick up where we left off yesterday.
Yeah, so if you're looking at the notes, this is called The Stages of Wealth, How Real Estate Agents Build Freedom for Life. And you alluded to yesterday, we started out by talking about your mission being profit in the first place. You're not going to get to investing until you have learned to create, much as what the work that we do with coaching clients, a predictable, duplicatable, and yes, profitable business in the first place. That was your first mission. And that was what we covered on point number 1 yesterday. Then we got into building profit, not just production. We talked a lot about being more of a listing agent than just being a buyer's agent or even being 50-50. So today we're going to talk about escape velocity, reaching true financial freedom. So we're making those assumptions that we covered yesterday. If you missed yesterday, you can get the notes, you can get caught up, you can listen to yesterday's podcast. Excuse me. So escape velocity is when your passive income exceeds your expenses. As you were saying, Tim, whether you wake up and get to work and do a new transaction today or not becomes irrelevant because your money is at work for you passively. That's when we're starting to get to true financial freedom. This is when you can do things to make sure that it continues to increase, like consider expanding your real estate portfolio. Watch what you do. Here's a thing that was in the notes, Tim. You'll notice tap equity wisely. How you operate when you can get a super low interest rate on your mortgage is different than not. And people talk, maybe you can speak to this a little bit. Some people will say you want to leverage those rentals out to the hilt. And other people, largely you and I, like to keep them paid off so that we're not speculating and keeping and writing, sucking all that equity out as you make it. It can be tempting. So this is that stage. And I wrote down in my notes also, in this stage, when your money is starting to work for you, beware of boredom, because you can reverse that very quickly just because the business is so predictable, duplicatable, and boring. But boring
You
is
know what?
good.
I just noticed, Julie, that you did this in a very logical sense. The first one was launch plan. The second one was ground phase, foundation for financial freedom. This is how smart I am. Now I'm
Escape
realizing
goals.
that you did this like a rocket taking off, escape velocity. Okay, I get it.
Yes.
Very clever. All right. So you mentioned about leverage, and we
Mhm.
do want to talk about that. We should just briefly, okay?
Well, because this is the stage where you start to see that, and you've been building equity, and there's a lot of different people that'll say, well, you just want to keep on leveraging and leveraging. And it's kind of like the thing we talked about yesterday, where doing more units and more volume doesn't necessarily make you more profitable. Owning more and more rentals or more units, if you're leveraging them up, also doesn't necessarily make you more profitable, and it is more speculative. But I know
Well,
there's
that
people that would argue with us.
Well, yeah, there are, and they're all wrong. So here's the problem with that, right? So if you basically have a property and this is you see this all the time with these YouTube investor coaches and all these guys,
Mhm.
and this is the way they've always talked, by the way. And I'll tell you guys the punchline why it's stupid. So what happens is they'll say, go buy a four family, and then you put the least amount of money, you somehow magically get it all four units rented. You somehow magically over, say, 2 years, raise the rents by 50%. Turns out this was an absolutely underperforming asset, and you're the only one that saw it. So now you took that property that you bought for, say, like $500,000, and then you owe $400,000 on it. Now you're going to get it reappraised magically for $750,000, and you're going to pull out basically the equity, leaving a new mortgage balance of, say, $650,000, because you're still going to leave $100,000 in. Right? You guys follow me on all this? Okay, what happens when you do that? Okay, you do get some cash back, and you don't have to pay taxes on it. That's true. But you're still left with a property with a $650,000 mortgage payment. And the mortgage payment has to be made by you if the tenants aren't making the mortgage payment. So ultimately, what happens, and the reason that we've seen a lot of people get screwed by doing this, is what happens if you, for example, have a concentration of properties that are in a market where unemployment starts to rise, or migration trends will start forcing fewer viable tenants, and your rents fall. Oh yes, rents do fall. Okay, here's the other one. What if your property insurance goes up? What if the property tax goes up? What if, what if, what if? And so what happens is all these properties that you've been sort of, rolling, buying, refinancing, pulling cash out, buying another one, refinancing, pulling cash out, just keeping on that. What if all of a sudden all of them are starting to have problems? Oh, you have 10 properties now, and 4 of them need roofs, and 6 of them need furnaces. Oh, by the way, now you have 50 doors, and 50 doors means 50 furnaces and 50 air conditioning units and 50 sinks and 50 refrigerators. You guys get the point? It does not take long if you pulled all the equity out, because you're still having to support the debt payment for you to be upside down. And that's what happens. And that's the reason I hate that advice for 90% of all real estate agents, because you end up over levered. You end up, oh, I got this cash, I can go buy my new Lamborghini. Well, that's true, but you're going to be selling that bad boy and it's going to depreciate because you now have to support the mortgage payment, or you're going to lose all those assets, and now you've screwed yourself. How many people do you guys know that have fallen into that exact trap? Interest rates like they are make that a very easy problem to have. Interest rates go down, which they're going to absolutely go down. You're going to see a lot of people, especially again, those YouTube fakey do guys, are going to be talking up the idea that you should just be leveraging the hell out of all your assets and buying more houses and buying more and buying more and buying more. You've got to remember, your goal is ultimately not to have the greatest. Net worth happens as a side stream benefit to cash flow. So if you want to say, brag about, and notice they always brag about this, I have 25 doors. My properties are worth, it's just like real estate agents bragging about their units and their volume. Same exact logic. Or
How many millions of dollars under management?
right,
Yeah.
exactly. That's what they'll talk about. They don't talk about their net cash flow. You never hear them talking about net. Where Jules and I are talking about net, because that's how you pay your bills.
It's
And
the definition of rich.
right. And I'll tell you what's more is that as you might get to, most millionaires in the United States have become millionaires in their own lifetimes, in their 50s and 60s, through real estate. All right. So I just told you a fact. So if you think most millionaires and rich people are rich from inheritance, it's less than 5% inherit it. Now, I will say going forward, I researched this, Julie. I think it was 80 trillion or 70 trillion is passing from baby boomers to millennials.
Oh, right.
So
That's a big
there's
deal.
a percent of people that are going to be waking up one day and finding themselves with money. It's going to be unprecedented for history. That's going to start all kinds of new trends in real estate and all other things that we're going to talk about in another podcast. But that aside, most of the folks that you know that are single digit millionaires made it in real estate and up, and then made it essentially from the appreciation of their own existing properties. And then this is the point I'm trying to make. What happens a lot of times is people get sick of managing their properties, don't want to do it anymore. Or for whatever reason, they want to, they'll put it in the stock market, or they'll put it in, say, for example, some municipal bond or treasury or something like that, that pays 5% per year. So you have the asset, let the tenants pay the asset off for you. If you can refinance to a lower rate without taking money down, do that. Don't pull money out. And then when the asset's paid off, you can just keep it and keep the cash flow, or you can sell the now appreciated asset and depreciated asset and the property you've been making all this cash flow from all these years. And you can put it into, say, for example, the S&P 500. You talk with your own tax advisor or whatnot, but that's what a lot of people do. And that's how a lot of people build wealth through real estate, and then they move it into the private markets and public markets so that they are essentially, I think, probably have a little bit more predictable cash flow from it, and they don't have to deal with property managers. Matter of fact, a lot of the wealthiest multifamily investors that I know are doing exactly what I just said.
Mm-hmm. Well, it all gets down to profitability, right? When we were talking about the difference between keeping them paid off versus leveraging everything up, you have to have the profit. It is better to take the profit and reinvest it than having less profit or no profit.
Let me
Makes sense.
talk. Let me
Yeah,
let me build on something, Jules.
sure.
So, and this is something I want you guys to think about. Again, the multifamily investor guys are going to start coming out of the woodwork again as soon as interest rates drop. You watch this. I want them to explain why buying multifamily rentals, especially luxury multifamily rentals, makes sense going into the future with the enormous amount of money that's going to be inherited by younger people. Why would they choose to rent versus buy? All of them are going to buy. And Julie and I are running some, I don't know what to call it, rudimentary analysis and predictions on using AI based on what we know and what AI has been able to figure out about the amount of the transactional volume that will be happening over the next 10 years. And you will be shocked. I'm looking forward to sharing this information with you, but let me just foreshadow it. And I think it was year 12 from now, 12 years from now, the number of transactions per year, and we ran it through all three of the major AIs, we're predicting over 10,000 real estate transactions per year. So, and that's because a lot of million, I don't know, what did I say?
Thousand.
Oh yeah, million per year. And that's largely due to demographics, but also the wealth transference. And so all the baby boomers' kids, when they inherit that money, a lot of them are going to be buying real estate and more real estate and single family homes and vacation homes. It's going to change everything about our industry. It is exciting, but we're going to talk about that on a different podcast. So I digress. Julie Harris?
Yeah, so while staying in escape velocity for a moment and realizing that true financial freedom, I had some other notes in here about not just reinvesting cash flow from rentals, we talked about that, but also building multiple income streams. We talk about spokes in the wheel with regards to lead generation and having multiple ways of generating real estate leads. That same spokes in the wheel model can apply to multiple ways of having that passive income. We talked a lot about rentals. That's right there in everybody listening's wheelhouse. Of course, we're going to talk about rentals, but things like EXP revenue share, things like, what happens when you're investing and you can pull some money off of, your dividends, having not just one way, not just rental properties, but having multiple ways that you're creating your wealth passively. Make sense?
Well, Julie said spokes on the wheel. And so all of this basically goes back to yesterday when we were talking about building a profitable business. And a lot of you have been listening to us for a long time and you're ready to build a profitable business. Join Premier Coaching. Just go to premiercoaching.com or click the link below and join. You get the first 30 days of Premier Coaching for free. And that does include a daily semi-private coaching call with the Harris Certified Coach. And you get all of level one. And level one is this huge amount of content. most important thing about level one is the real estate treasure map. You want to complete the real estate treasure map because it will help you build your business and life plan, which includes, as Julie just said, spokes in the wheel. So spokes in the wheel, spokes. Imagine each spoke represents a source of, in the real estate treasure map, it's a source of business, source of leads. Well, in your financial spokes in the wheel analogy, it's a source of income. And so we're going to teach you guys all this in Premier Coaching. So just go to premiercoaching.com. But Julie's point is when you're thinking about creating wealth, when you're creating, becoming rich, where your money's working for you and you no longer have to work for your money. I'm stepping outside of your real estate business. I'm assuming you've invested your business into or your money, your profit into S&P 500. You bought some rental properties. You're diversifying. All these sources of income are not dependent on you actually doing anything because it's all in the passive mode at this point. One of the greatest wealth, if not the greatest wealth creators that we've ever seen, and I don't think this is arguable actually at this point, is the EXP revenue share model. I've never seen anything like it. It's something that when you actually wrap your mind around the ramifications of the EXP revenue share model on your life, it'll change your life forever. I'm going to give you guys an example. There's a wonderful gal named Casey Anderson, and she just turned 30. It was her birthday the other day, Julie.
Oh yeah.
Yeah, and she's in Florida, Dearborn, Florida, Deer something or another. Am I saying it right?
I think that's right.
Yeah. Anyway, she's a brilliant young gal. She's building a team. Well, her EXP, she's got a great real estate business. Her EXP revenue share group passed 100 agents. So what does 100 agents mean to Casey? She's making tens of thousands of dollars per year passively just from revenue share. She doesn't have, those aren't from her transactions. Those aren't from her having to manage deals and lead generate and, pre-qualify and close. Those are coming from passive income from her revenue share group. And I know other people that have thousands and thousands of people in their revenue share group who have just started, with EXP maybe 2 or 3 years ago. It's incredible. I'll give you another example. Dan Lesniak and Carrie Shaw. I don't think I can talk. Well, I'm gonna. All right. So their revenue share group now is 700 or 800 agents, and they started maybe 2 or 3 years ago. They're making, I won't give the exact number, but they're making hundreds of thousands of dollars per year off of EXP revenue share. And this again, if you, for example, let's say you have to earn $10,000 a month passively in order to pay all of your bills. How much money are you going to have from how much profit are you going to have to generate and then put that money into something that's going to generate passive income for you? You guys following me on this? I'll make it simple. So if you invest $1 million, remember after taxes in the S&P 500, that's going to throw off on average about 10.3% per year. So $1 million will generate $100,000 per year. You guys following me? 10,000, 100,000 will generate 10,000. You get the idea. So if you had to earn, let's say, $120,000 a year, you'd need between $1 million and say $1.3 million. Yep. Invested in the S&P 500. How long will it take for you, even with compounding, to get up to 1.3 million? Some of you already have far more than that, but just take my point nonetheless. All right. So the whole point of having the money isn't just to brag about I'm a millionaire. The whole point of having the money is so you can make the money passively from the S&P 500. You guys following me? Now your money's working for you. You no longer have to work for your money. It's generating $120,000 passively per year. That money just, is available for you if you need it. Now, that's going to take a while for anybody. If you were at EXP, for you to make the same amount of money, if you put an hour a day, probably, if you focused on it, at a scheduled time, like we teach you in our EXP revenue share group, and you do that consistently and you follow a system and you say, this is going to be the thing that's going to build escape velocity for me, perhaps faster than even selling real estate, because in many cases that is the truth.
Much faster.
Much faster. You can then have the benefit of having the equivalent of $1.3 million in the terms of revenue share. So revenue share, you can make $10,000 a month from revenue share, or you can save up 1.3 million and make $10,000 a month. You guys get the point? And revenue share,
Or you could do both.
Yeah, or you can do both, which is, by the way, what our point was with regards to spokes, which
refer to previous conversation. Yes.
Yeah, exactly. So the smart move is to do both: build a profitable business, EXP revenue share, invest in rental properties, do some of these other things. You don't have to do them all at once. You should, we help you create a plan and a system for going about that. But I'm here to tell you with 100% confidence that if you can only do one thing, it's A, build a profitable real estate business, for sure, do that. But the thing that's going, and we've experienced this personally, we've seen this happen for all the people that have joined our EXP revenue share group. You know, we have over 3,000, between 3 and 4,000 people in our EXP revenue share group. We've seen so many of them create more passive income than and some of these guys are in their 40s and their 50s, and they had virtually no savings when they started the EXP revenue share. I don't want to give you guys more examples because I don't know, I don't want to make them mad in me telling their story for them. But more people now that are making tens of thousands of dollars per month from EXP revenue share, that when they started, they had no savings. But they
Well, but
had,
that goes back, let me take them back to your original point that got us talking about this. It is a wealth accelerator because it happens so much more quickly
yep,
than, I mean, I don't care how high your average sale price is after paying yourself, paying the IRS, paying your state taxes, paying all of your overhead, your kids' school and everything else. You still have to build up that $1 to $1.5 million to invest from somewhere. And I, along with you, have seen people do it so much more quickly using the EXP revenue share model. That's what I think you meant by a great wealth accelerator, is because it takes so much less time. And you're not talking about having to have thousands and thousands of agents. Look at Casey's example. You know, she's got 100 people in her group. And I'm not sure exactly how long. I think Casey probably 4 or 5 years.
no,
David
no, no.
Carey probably
She's
3 years.
no, Kate, no, Julie Casey is
Casey?
sponsored by Dan Carey.
Oh, so it's actually less.
It's less.
So
I think
yeah.
Casey's been at the XP for maybe 2 years, 2.5 years.
Okay, well, I mean, think about that. How
Yeah.
many of our listeners, I know it took you and I a long time through rental properties. I was just calculating in my mind as you were talking, like the equivalent of bringing in 10,000 a month from rentals. First of all, those bad boys are going to have to be paid off for the most part to even get the cash flow, okay? Which means you had to have the money to buy them in the first place. Okay. You had to
Yep.
purchase wisely. You have to rent them out consistently. You have to deal with all
Well,
of those things. It took us, I don't know, but a really long time.
it took for you and I to make, okay, we still don't make anywhere near the amount of money from our paid off rental properties, from our dozens of paid off rental properties. We still make less than half from that than we
Yes.
do from our EXP revenue share.
And I might add, when we bought them, that was not the same prices as when these guys have to buy.
No, we have, yeah, exactly. But here's the funny thing, Julie, and I have people ask me this question, you know, should I be buying rental properties? And it's hard,
Maybe.
I struggle to say this. The answer is probably not, because just all the reasons, insurance, taxes, interest rates, just all the things, tenant right laws in some states. So if I had to do it all over again, I'll tell you what I would do. And this is Jules and I'll be surprised if she doesn't agree with me. We wouldn't buy any rental properties. Nope.
No.
We would have taken all the money that we put in to buy those rental properties, and we would put those in the S&P 500.
Yes.
And we've used AI to figure this out, and it's depressing, to be honest with you. But if we were to go and if we were to start it all over again, you know, we've been married for 34 years this year. So if we were to start all over again, and our original plan was to have enough paid off rental properties to basically retire by the time we were 40, and we did accomplish that goal. I was 41 and she was 40, so maybe a year late if we're being completely honest. But moral of the story is we wouldn't have bought any of them. We would have put all that money in the S&P 500. Now, if you were to ask me today, what would I do? I would absolutely sell real estate at a high level very profitably. I'd put it in the S&P 500. I would join EXP Realty, and I would create a revenue share group. The revenue share group is completely passive once you scale, and so is the S&P 500. That's what I would do, and I wouldn't buy any rental properties. Agree or disagree?
No, I would agree. I guess I would say I 85% agree, because there are some areas where it does still make sense. We've got coaching clients in places like Tennessee and Alabama and Mississippi, parts of Florida where it still can cash flow for not an arm and a leg, but that's gotten to be so much more challenging. You know, we used to really like Charlotte, for example, as a good rental market, and that's gotten to be super expensive. You used to be able to cash flow in Austin, and Austin costs almost as much as California now.
Jules,
So
look at our
it's
properties
tough.
in Columbus, right? We have droves of properties in 43214, 43085. But if I take one that we bought, say, for example, you know, on Beach World, let's say,
I
okay,
know.
and this one of these little, you know, tiny houses, less than 1,000 square feet, they are worth probably 280 to 300,000. Julie and I paid probably 100,000 for most of these, or if not
Yeah.
less. Well, the most you can get on rent on those things, and they're paid off. We've had these damn things for a long time, and our houses are paid off. But most of our paid off houses are getting what, Julie? 1,300 a month.
12 to 15, yeah,
Yeah.
right in that pocket.
Okay. And after property taxes,
I
and all
mean,
the
it's hard to get more than $1,500 a month out of 700 square feet. Okay.
yeah.
Is
Okay.
this?
So that's with them paid off. And so that means we're making, assuming there's no repairs and they're rented, we're making $1,000 a month off of them or $12,000 a year. And they're worth, say, $300,000. If you just look purely on cash, that's garbage. I mean, it's straight
And
up
then
garbage.
it's vacant and then it needs a roof and all the
Yeah.
rest.
So if you wanted to buy one of those properties from us as a rental property and you wanted to put 20% down and you have a $240,000 mortgage and the rent's still only going to be $1,300 with you making $1,000 a month net, it's even more garbage for you. So that's the way that most of the country is. And so it's really difficult for me to be enthusiastic about buying rental properties nowadays. So listen, we talked a lot about eXp Realty. It wasn't even in our notes, but it's on our mind. If you're interested in moving up to eXp Realty, you want to learn more about eXp Realty, it would be our pleasure and our honor for you to consider us as your sponsor. And if you're at eXp Realty, we are open to co-sponsoring as well. You can text me directly at 512-758-0206, 512-758-0206 if you're ready to be sponsored by Julie and I at eXp Realty. And just just send me a text that goes to me, not to AI or an assistant, and put a little, bio and description on. Just let me know a little bit about you. If you're a new agent, great. If you're a seasoned veteran agent, if you're a broker, just give me a little, so when I follow up with you, we can start the conversation flowing. And if you're just looking to learn more about eXp Realty, in the description of today's show, whether you're listening to us or you're watching us on YouTube, just click the link and you can just watch the video and go to our group's website. It's called whylibertas.com. In the meantime, I know you have to go pick up Zoe.
Yes, I do.
So you guys have a fantastic day. We'll talk to you for day 3 about this wealth building podcast, which I know you guys love, the stages of wealth building, how real estate agents build freedom for life. We'll talk about that on the show tomorrow. Have a fantastic day, and we'll talk with you tomorrow. Hello, thank you for having watched this video. Please remember to subscribe to our YouTube channel.
That's right. And don't forget to hit that like button, leave your comments and questions below, and we will get right back with you.
Thank you for watching this video. And remember to watch the next one. You're going to love that one.